Hello my dear student, welcome back to online class. In today's class we discuss about the fourth unit of monetary economics. In the last class we discussed about the meaning of commercial bank and the function of commercial bank. So in today's class I discuss about the continuation of this chapter, that is balance sheet of a bank. So a balance sheet of a bank is an great important for the understanding the source of funds it processes at the use of these funds are put. As is well known, a balance sheet of an institution indicates its liabilities and the assets. The liability of a bank shows the source of its funds and the assets shows its use by it. Generally, the balance sheet of a commercial bank is prepared and published at the end of each financial year. So, the balance sheet of commercial bank is more important than the balance sheet of ordinary business concern. So, this is because the commercial bank is dealer in other people money, and as such the community as a whole, and not only its shareholders as interested in the examining its balance sheet for the purpose of assessing its financial strength. So the balance sheet of commercial bank, which is prepared and published every year, it gives us detail about the performance of a bank during a year. So in the balance sheet we can see the detail about the performance of the whole year. So a balance sheet has two sides. One is a liability side, another one is asset side. Under the liability of a commercial banks are the items which are to paid by the bank, either shareholder or depositor. And the asset side of a commercial banks refers to those items for which the bank gets an income or which it's kept to the protect its interest and its liability. So the two side of balance, a total amount of asset will be equal to the total amount of liability. So here we can see the balance sheet. So in the left right side liability and the right side asset. So in this table the various item on the balance sheet, the actual amount against the each item are not shown because they were from bank to bank and from time to time. So it's varying from the bank to bank and the time to time. The significance of each item is balance sheet is discussed in the balance. So here we can see the liability. Under the liability, share capital, and this side we can see the asset, and under the asset we can see the various indicates. So next, so generally balance sheet of commercial bank prepared and published at the end of the financial year. Already we discussed, and the balance sheet of commercial bank is more important than the balance sheet of a business concern. And the balance sheet of commercial bank, which is prepared and published every year, given us a detail about the performance of the bank during the year. So we can see the liability side. So the liability of balance sheet of bank indicated the source from which the bank has raised its funds. The main item of the liability side of a balance sheet of commercial bank. So under that we can see the share capital. Share capital refers to the contribution made by the shareholder of a bank. It contains different form in the process of development of a commercial bank. So share capital means it contributed made by the shareholder of the bank. So it containing a different form in the bank. So under that we can see the authorized capital. So authorized capital, the authorized capital refers to the maximum amount of capital that the bank is authorized to raise in the form of shares. So generally only the part of authorized capital is issued in the form of share to the public. So generally in the liability side, a part of liability side, capital is issued in the form of share to the public. So next, issued capital. So issued capital refers to the part of authorized capital which is issued or offered by the bank to the public for the subscription. So it is an called as offer. So offer by the bank to the public. Next, subscribed capital. So subscribed capital refers to that part of the issued capital which is being subscribed by the people. The entire amount that is subscribed may not be paid immediately. It may be paid in the installment spread over a number of years. So subscribed capital, it is paid by the installment procedure. So a number of year, it may give the year to installment spreaded paid in the banks. And next, paid up capital. So, paid up capital refers to the part of subscribed capital which is actually paid by the subscriber to the bank. The bank may call up remaining part of the subscribed capital whenever it need additional money. So, these are all come under the liability side of share capital. Under that we can see the authorized capital, issued capital, subscribed capital and the paid up capital. So next we move on to the reserve fund. So this is also come under the liability side. So reserve fund refers to the amount accumulated in the commercial banks over the year out of undistributed profit. So the bank can be used the fund during the period of business loss or other other critical time. A reserve fund safeguard the interest of bank in a time of stress and the strain. So in the time of stress and time. So the Indian Bank Commercial Companies Act lay down the 20% of profit should be first transferred by the reserve fund and only remaining balance may be distributed. So only 20% of profit should be transferred, remaining balance is distributed to the business loss categories or contingent times. So next, deposit. So deposits are considered as liability to the bank. So because the bank has been repaid the deposit to the depositor, so whenever the wants to withdraw their money. So a bank which failed to perform this obligation losses of confidence of the public. Deposit collected from the public constitute the biggest portion of the bank working fund. The deposit collected by the bank are the four types. One is fixed or a time deposit or current or demand deposit, saving bank deposit or recurring deposit. On the four types of collecting the deposit by the bank. And next, bill for collection as per constant. Bill for collection refers to the bill received by the commercial bank from its customer for the collection. They are liabilities for the banks because the bank is required to pay the proceeds of the bill collection to the customer concerned. And next, acceptancy and endorsement. So, commercial bank accepted and endorsed bill of exchange on behalf of its customer. Accepting a bill implies a guarantee for the payment of bill whenever it's mature. The bank should the responsibility of paying the bill in case of customer fails to pay the amount on its time, or acceptancy of bill of exchange representing a liability for the bank. So here other, so it cut into the slide, so I explain. So next we can see the liability side, other. There are other types of liability like borrowing from other source like commercial bank and the central bank. So when the bank is needed of money, it may borrow for other bank. As a last resort, it can be borrowed loan from the central bank also. The amount borrowed from the other bank has been repaid. So this is all about the come under the liability side. So next we move on to the asset side of balance sheet. So the asset side of balance sheet of a bank shows the manner in which the fund of commercial banks are invested over the various type of assets. It employing in the available fund over the various form of assets, a bank has been bear in the mind three principles, that is liquidity, safety and profitability. So under that asset we can three principles: liquidity, safety and profitability. So as a bank is requested to meet the day to day demand for the depositor for the cash, or it should be keep into the position sufficiently liquidity. So further, as a bank is declared in the other people's money, it should be bothered about the safety of funds belong to the depositor. So next, the main item appearing on the asset side of a balance sheet of commercial bank are discussed under that. First one is cash. The first asset of commercial bank consisting of cash includes cash in hands, cash held with other banks, cash held with the central bank. So let us discuss one by one. Cash in hands. The bank does not lend all the money that it received in the form of deposit. A certain portion of cash is kept by the bank in hand to meet day to day withdrawals of the customer across the counter. So this is called till money. So because amount it's kept into own tills. So second B, cash held with the other bank. Usually commercial bank keep some portion of cash with other banks for the purpose of adjustment of a interbank claims. So cash held with the other bank is considered as cash because they can be withdrawn to meet the liability of the bank. And the next one is cash held with the central bank. The banks are also obligated the keep either by the law or a traditional a part of their deposit with the central bank. So it given power of the central bank to have control over the commercial bank. So cash is a most perfectly liquidity asset held by the commercial bank to perform day to day transaction. So it is a first line of defense of the facing the withdrawals of the depositor, but it is also bearing non-income earning assets. So next we can see the money at call and short notice. It is also come under the asset side. So money at call and the short notice, it consider of advanced made which are for very short period. These loan can be called back at any time. So the England, for instance, such loans are given to the discount houses, bill broken, and the acceptancy houses. So next one, bills, discounts, and the treasury bills. A very important function of modern bank, it is discount bill or a handles of the business. So commercial banks discount bill of exchange of facility traded and trade and the commerce. Uh, bill discount representing the amount invested by the bank in the discounting the treasury bill and the trade bills. So next we can move on to the investments. So in the addition, the loan and advances, modern commercial bank also invested a part of its surplus funds in a government securities and earn interest on them. So in some countries, the commercial banks are required under the status to investment a portion of funds in a government and other approved securities. Loans and advances. So after providing for cash and investment, the rest of funds are lent out the form of advances. So if the bank does not lend the deposited by the others, how can it pay the interest on the deposit to the depositor? So it must be aim both liquidity and profitability. Banks advanced loan it in the way. So in the way like loans, overdraft, cash credits. So the amount of loans and advance that banks market depends upon the condition of business and the trade in an economy. So next we can see the bills receivable. So bills of exchange appear both on liabilities as well as the asset side. So before collection, these bills representing the asset, but after collection they become the liabilities of concerned bank. So next, acceptancy and endorsement. So this item is also shows the liability side of balance sheet. So customers liability for the acceptancy and endorsement representing the amount due to the bank from the customers on behalf bills of exchange are accepted and endorsed by the bank. Next, other assets. So banks also possess other assets such as building, furniture, lands, and other properties. These days, a bank should have attractive and strong buildings. So similarly, it should be have good office furnitures, computers, and other equipment. So it's worthwhile it note that assets structure of different banks will varying depends upon the composition of their deposit. So a bank proportion of assets in a liquid form. So on the other hand, in the bank possess more item like a deposit, it will be need a hold a relative smaller proportion of its asset in the liquid form. So I concluding today's class. Thank you for watching.